So why do you still trade SMC? I'm happy that someone commented that his SMC strategy is not working anymore. What could be the problem that I should help him to make a video on that? Reason why people failed on SMC is because they focus on a lot of things. And remind you, simplicity is profitability in trading. If your strategy is not simple, bet me you can never make money. That's why some people who claim that trading ICT are not making money, because ICT every week they change narratives on how to approach their entry. So now pay attention to this. SMC is a very good strategy because you're trading advanced price action, waiting for price to come to your area of value, which is point of interest. But nowadays it looks like it's waste of time and energy because of the complication added to looking for endorsement and liquidity to grab. And I have found a solution, and I told you guys that it's better you focus on fair value gaps on higher time frame and wait for entry in lower time frame. How does it work? And it's very simple. Tell me when you're waiting for two concepts to happen and when you're waiting for three concepts to happen, which one would be more easy for you to execute and for you to understand. So trading is a very hard game, and it's of no use adding complicated stuff to it. It makes no sense to me. So now this guy that asked a question, to help him out, I want to give you a little breakdown on how to approach SMC if you like to trade that. Now the only thing we have to do every day is just to look at our chart on daily time frame, because we are day trader. Your highest time frame you gotta look at on daily basis is daily time frame, and this is BTC. The reason why I use this BTC is because I love to trade it. It's have very clean chart. So this is uptrend, right? So let's take for instance, because I always told you guys that price operating this phase from internal to external, from external to internal, from internal to external. These are the phases that price undergoes on daily basis, weekly basis, monthly basis. So it can also range as well. It's not the first time, it can also range as well, and you can equally see price in downtrend, right? So it's not new to everyone that when price was in downtrend. So these are the things that we see on daily basis on when we open our chart: uptrend, range, and downtrend. So it's very simple. So, but for those of you who trade SMC, you focus on so many things. That's why you are failing to make money. Always focus on fair value gap, daily fair value gap. Okay, now let me give you an instance. A fair value gap, valid fair value gap, consists of breakouts in a zone. Like we have price was in uptrend, and we have a pullback, and there is a breakout here. So once you have this, any fair value gap we see in this very zone is valid, but using the extreme fair value gap make it more unique. But if there's no fair value gap in this downside, you can use the extreme fair value. That's when you have the power to use this. So pay attention to what I said. The fair value gap, you can see so many fair value gap in this very push because it's an impulsive movement. Using the extreme fair value gap makes you more money, but using when to use the above fair value gap is when there is no fair value gap in this zone. I'm not talking about that block. We are focusing on fair value gap. So now, as we have know what we are looking for, everybody knows what is fair value gap. But if you don't know what's fair value gap, for those of you who are coming into trading newly, this is how fair value gaps works. When we have series of candle pushing up with a fast, that is, we have this nature, we have another one, we have another one. Once you have three candles moving up or down, the gap in between this zone is a fair value gap. So we're waiting for price to do what? Waiting for price to come and retest into the zone. So let's talk about entry model, as we have known what we are looking and what is fair value gap. For those of you who don't know what it is, this is how we enter the trade. Let's assume price that our fair value gap is a bearish fair value gap. The only thing we need to do is, because it's a bearish fair value gap, price is moving up to mitigate the fair value gap, right? You see price moving up. The bearish candle we have moving up is moving up to mitigate something. Like it's moving up to mitigate the daily fair value gap. So here is the daily fair value gap. Let's, for instance, you have mitigated the daily fair value gap. Now, how do we enter the trade? The only thing we have here is that we have bullish fair value gap, right? This bullish fair value gap is in 15 minutes. Your entry time frame is 15 minutes. So once you indicate your daily fair value gap, you are waiting for inversion, right? So because you are using bearish fair value gap to do this example, you are seeing bullish move towards this very daily fair value gap, which is bearish. When you think of entering the trade, is when price starts moving down, like price starts moving down, you're having bearish move, bearish candle, another bearish candle, another bearish candle, and another bearish candle. So what happens here is that we have inverted this bullish fair value gap, which shows us that this very move here, the whole bullish move here has been exhausted. That is, the strength of the bearish move has been exhausted. So our entry will be somewhere around here. After this inversion, we have a fair value gap here, but if you want to make more money, all you have to do is wait for the extreme fair value gap. But for me, there's a way I tackle this, because sometimes you can miss this move because price is moving faster. The only way to approach this entry is to mark out the first fair value gap you see. Once price move back into that zone, let's assume that price starts moving back into the zone. After this move, we saw a candle, another bullish candle, and another bullish candle towards this very zone. You are waiting for just engulfing bar, and the engulfing bar you're waiting for is something of this nature. You want another candle that will open to create a wick, take up this high and drop below. Maybe it will close like this. That's when we take our entry. If you're using the first fair value gap on our entry, this happened in 15 minutes. But if it is in this very zone, the extreme fair value gap, you can set your pending order and go your way. You understand? All you have to do is to make sure that this inversion happens with a very good push. You can see the series of candle printing bearish and another bearish, another bearish, and bearish, creating a clean fair value gap. That's when you know that the momentum of the sellers or the buyers have changed. I hope this is clear. So I will give you an example on BTC so that you guys should stop trading all this SMC, market breakup structures, endorsement, and all sort of liquidities without making money. So see you in the example section. You are still watching up to this extent, what's holding you to subscribe to this channel? What's holding you to like this video, share with your friends who are still struggling? So let's take the example now. So I'm about to give the example, but I don't want to pick a sherry example, which is very simple, because even if I want to do that, I will just pick this very gap and give you the example. You see the expansion, but I don't want to do that. You can see that the expansion. Another one is here, is another fair value gap. You see the push, but I don't want to give you that. All you have to do is to know how to pick clean fair value gaps on daily time frame. This is our daily time frame. You can see we have very good fair value gap here. You can see how price tap into the zone, push up, and another breakout from this zone. We have another fair value gap. You can see the price actually expand. So many of them, we still have a breakout here, very clean fair value gap. You see the expansion, but I want to pick that fair value gap inside the zone where there is a lot of difficulty. So pay attention. This is high and this is low. Why do this candle, this very candle here, created a very nice pullback here, take liquidity up to this extent and created a high, and price have closed above, which makes it a valid pullback. Now that we have a valid pullback, we are looking for fair value gap. Remember, this is happening in daily time frame, and the daily fair value gap we have here is we only have very 7 years, which is a tiny dip. Now that we are waiting for price to come into that very zone to respect, but price is not respect, what happened? We have inversion. And remember why I use this extreme first fair value gap is because there's no other fair value gap inside the zone. Someone will say, why don't you use this other block? I'm not talking about other block here. My strategy on how I tackle SMC strategy, why I'm not using it, is because I'm using fair value gap. So don't ask me reason why I'm not using this other block. I'm only focusing on fair value gaps on daily time frame that control my bias and entry, nothing more, nothing less. So now that I have the version here, what do I have to do? I have to wait for bearish fair value gap to form, and all of a sudden you can see that I have a bearish fair value gap. A bearish fair value gap formed here, though it takes time for this setup play. Have a bearish fair value gap after this inversion. Remember what happened here. So some people can still pick this fair value gap here. They'll say this is a fair value gap, and even if you pick that, you can see as price still respected and drop down to the extreme, right? So even if you pick this very candle, you still make money. But I picked the extreme fair value gap for a reason, because of what my backtest data shows, that I have to use the extreme fair value gap for me to make more profit. So all I have to do now is just to move down to 15 minutes time frame. Daily and 15 minutes time frame is what we are using. So anything outside from that, I'm not in for. So this is what we have, and as you can see, price keep on pushing towards this bearish fair value gap. You can see that this is the bearish fair value gap. So this zone is that inversion fair value gap that we marked out, and the price have tapped into it. All we have to do is to wait for this extreme bullish fair value gap to get inverted. Once it get inverted, we are looking for entry. Now we are looking for bearish fair value gap. Do we have any bearish fair value gap? We have one here after this inversion. Look at it here, but price did not take us in. No one here. We are still moving to see if we can have a bearish fair value gap. We have one here. This is a bearish fair value gap we have. We have to mark bearish fair value. Price tap us in, we are going short. Price tap us in inside this fair value gap. Our stop loss will be here. Target at least 1:2 or 1:3, depending your confidence. But 1:2, almost can see how price drop this very good. You can still look for another fair value gap during this period to take your entry. Look at, we have another fair value gap. If you are using here, we have to confirm our entry with engulfing bar, and the engulfing bar we have here as price close here, this is where our entry lies. We're entering here, and like I said, this is our entry and our stop loss below here, targeting 1:2. This 1:2. And do we have another fair value gap as we approaching? There's no more the fair value gap we have here vetted by this. So that's how I tackle it. Remember what I said? Once you have a fair value gap and you want to use the first fair value gap, all you have to do is just to wait for engulfing bar to take you in. You understand? But if you want to use the extreme, you have to do what? Just target, set your pending order. Once price tap into that, price will take you down. So that's how to do that. I want to recap it now. Just go to daily time frame, mark a fair value gap that is clear to you, move down to 15 minutes time frame, look for inversion of fair value gap as you have here. The bullish fair value gap has been inverted by this push. From that spot, we are looking for bearish fair value gap to take our entry. We have one here, we have one here. So that's how to do it. And if you're confused, still tell me where you're confused. I will still do video in details to keep you guys updated, because trading SMC is hard for those of you who don't understand this game. See you on my next video. I hope this guy that have this question should appreciate this video by telling me that he have learned a lot today. Bye for now.